All right, yo, what is up, guys? Your boy Roxy. I know I haven't posted or haven't done any documentation uploads because I'm still in the process of making them. And I have the October one, but it's mixed with the November one, so it isn't really good. But you can see new room, everything, just new, I guess. You know, we got a new. But I'm gonna give you guys my 2024 outlook on what I'm expecting for 2024, and I'm gonna start off with the Dixie chart, and then eventually I'm gonna go into Euro USD, GBP USD, and then the indices pretty much. So I'm gonna do the dollar, and then eventually I'll go into forex pairs and then the indices. So for dollar, really, you know, if I clean the chart here, or if I hide all the drawings, you can see pretty much on the 3-month or the monthly chart, you know, I think we're more inside of a range bound market, and we took out buy side, we hit the sell side imbalance, now we're dropping, and now we're aiming for the sell side liquidity down here. And you know, usually every 3 months there's going to be a quarterly shift. So on the 1st of January, basically in 2 days, I'm going to be waiting to see, you know, if that quarterly shift continues to push us lower, or if we eventually have that, you know, move back up and continue back up, because we are inside of a buy side imbalance on the 3-month, and you know, we're nowhere near closing below it and making it an inversion fair value gap, but you know, we're still inside of it. So I want to see if next year we can, you know, we start up bullishly, or I mean, if we started bearish, you know, that power 3 on the monthly or the 3-month, you know, we drop down and then eventually we go back up. So something like this, you know, we open up and then we drop, and then eventually we, you know, have that manipulation phase, and then we continue, and then we have that expansion, open, high, low, and close, and we close a little bit further like that. And that is pretty much, you know, the candle, something like that, you know. But pretty much what I'm watching, since we are inside that buy side imbalance. But if we go to the the monthly chart, I should say, you can see here pretty much on a higher time frame premise, we created an inversion fair value gap. We hit the rejection block. I probably am going to take this off and use the consequent encroachment of the wick. So that's what we're going to draw here, and that's going to be our next objective for whenever we reach that. All right, so we drew that out, and we have the inversion fair value gap high and low. We have the consequent encroachment of that monthly. I'm going to take this off because it doesn't really matter to me anymore. And we still have sell side and buy side of our external levels, the range we're in. And if we go to the weekly chart, we had that order block, or mitigation block, I should say, and that sell side imbalance we tapped into twice and then eventually dropped. We have this inversion, but it's already about to be closed through, and then we're going to hit pretty much the consequent encroachment that we drew of the discounted wick from the monthly time frame. We did have this monthly breaker, but it just, again, disrespected, since it is more inside of a range bound market, and we don't have any sell side imbalances created right now from the price leg we have right here. So this would be probably my next objective if we do start climbing back up. And if we do make it in inverse, you know, we push price off of it, then of course I'm going to start to see, you know, price as more of a bullish standpoint. Premium is usually above, and discount is usually below, so that's kind of why I name it discounted. And I just, you know, usually wicks our gaps, so I'm not going to drop anything below the 4-hour, in my opinion, because it's kind of pointless dropping below the 4-hour if I'm trying to give you a higher time frame premise. And again, here we have a break of market structure, we have another one right here, and we broke market structure, now we're dropping. So again, this would be my target for right now, and then eventually, you know, I'm going into next year, you know, looking at that quarterly shift, seeing if, you know, we create the low, and then eventually we have that expansion up higher, or, you know, if it's the opposite, you know, if we create a expansion move up and then eventually drop down, and you know, we make that buy side imbalance we're in on the 3-month in inversion. So we're just going to continue. You know, there's multiple scenarios that can happen, since the market is more of a range bound inside the Dixie chart. I'm going to try to be as nimble and flexible as possible with my bias and my narrative, but you know, usually my narrative is one-sided. Whenever it's like this, you know, it's bearish. My narrative here is bearish. We have a breakaway gap, we have the order block, and we have this inverse created. You know, usually whenever price has that, you know, it's usually bearish, and we're seeking some form of sell side liquidity, and that's usually how it is. So as of right now for Dixie, I'm going to see, you know, if we come to the discounted wick on the monthly, and then eventually if we have this sell side liquidity taken out, and if we don't, then of course using the discounted wick if we have a retracement, since we did have a break of market structure, and then eventually come down and have another break of market structure and continue lower until we reach the sell side objective. But if we don't, then of course I would want to see order flow switching, and usually that would mean the PDA rates become inverse, and that's pretty self-explanatory. So let's go into the next market. We're going to go into the Euro USD. So we're here on Euro, and again, on the 3-month chart, it's very hard to, you know, use a correlation, since this one right here had a sell side imbalance, but we closed above it, we made it inverse on the 3-month chart. So again, next year I'm going to be wanting to see if we are bullish, come down, and then eventually have that expansion move up, and then of course if we're bearish, you know, open up, go up, then come down. And you know, it's usually like that with AMD or power 3 or the open, high, low, and close. Usually just it forms usually like that, you know, so simple. We're going to be looking for that quarterly shift and seeing if, you know, if we have that expansion move to continue us up, or if, you know, we're going to continue down and have this monthly sell side or buy side imbalance revisited, or with all the sell side liquidity here. If not, then of course, you know, targeting some form of buy side liquidity, which would be this up here if we don't reach it by then. So if not, then this sell side imbalance up here It's pretty simple, that's more inside of a deeper premium from this price lag, or that form of external levels of liquidity. Pretty much this up here and this down here, this would be internal, targeting some form of internal, which would be the sell side with this buy side liquidity up here. So, and again, here on this one, we had this buy side imbalance that is very unfilled, so it's kind of formed as a breakaway gap. We never came and filled it up, and it's in a deep premium. I mean, it's in a deep discount, so if we want to come down to a discount, we can come into a discount and reach into that. If not, then that's perfectly fine with me. It's showing price is really bullish for Euro USD. I'm gonna take this off again because I already showed you it's in a deep discount. We use this as an inversion since we had a SIBI, we ran through it, we came down, used it as a means to push price higher. What am I looking for? This right here, buy side liquidity, and if not, then of course the consequent encroachment as a target right now for us to target right now, since it's going into the new year. And I already give you my scenario, what I'm looking for. It could either be up or down, since usually Dixie is range bound. Euro looks like it wants to go higher, so what I'm going into is using that SMT. I want to see if they have a cracking correlation, and it just shows us if Dixie is going to be weak while Euro is going to be strong, then of course I'm going to be targeting longs for Euro and looking for $1 to go short, and that's pretty much that simple. One can show you like it's leading in the correlation while the other one is lagging, and usually when that happens, you want to use the one that's leading is going to continue to go, and the other one that's lagging is usually going to catch up, but it's not going to have that big of an expansion move in that direction like the leading one is. And this right here would be a premium wick. All right, so we have that there right here. Usually, again, I always talked about this in my other channel, the SMT channel. Once equilibrium is disrespected, majority of the time you're going to complete the market maker model we're in. So the market maker model here we're in is a buy, market maker buy model. It's pretty simple and sweet to see. This is your smart money reversal. This is your reaccumulation for longs, and eventually I think you will have one eventually here. Once we hit this, we're going to come back down, probably hit another PDA array in a discounted range from price lag from this low to this high up here that's going to be created, come down, equilibrium, maybe set a premium lag that or a premium array that became inverse, use that to push us higher and complete the market maker model. I think that's what I'm looking for right now, since equilibrium did get disrespected, this buy side got disrespected. We're inside the balanced price range, we are still inside of it. I want to see how this weekly candle closes. I think it's very important, but here we had this volume imbalance here, filled it up. It's not really as important to me. I think this would be more important in this wick, since it is the most recent one inside this price lag, not right here, just because this one is very long and it's inside this 3 candle formation. I'm gonna draw it out right now, and I'm gonna think this would be a PD array here. If we drop down any further, I think you'll find more to give you more of a 3 PD arrays to back you up in your defense. And again, here the inversion fair value up here got respected. If we go down to the other market, I think GU is not going to show as cleanly. But again, here if we drop down to the daily, you're going to see an order block here, inversion fair value gap. Again, just a fractal market maker buy model here that formed while we were inside of a larger market maker buy model on the monthly or the weekly chart. And it just shows how strong price is. We had a breakaway gap, we had all these down close candles just form as a mitigation block, and then we had a propulsion block in here with this order block, or again I think this would be more of a propulsion block, this one right here, since it is inside of this one, but it never closed above it yet to confirm it, so I think I would use it as a mitigation block for this one. And again, the inversion fair value gap, we respected it sort of because we closed below, we came back up again one more time, and then we pushed up. So price action hasn't been the best recently, since it is December and it is like isn't with the seasonal tendency. It's very low probability sometimes during these market conditions. But again, I'm just looking to target the premium wick with the buy side up here, and until we get up there, I'm going to be looking to see if these premium arrays get used to push price higher. I'm going to be looking to see if we create any more buy side imbalances on the weekly or monthly. And if we come down to these PD arrays we are forming here, I do believe that quarterly shift is going to be very important. Using it in retrospective with the PD arrays or the market maker models is very important, so I'm going to keep that in the back of my mind. So power 3 on that 3-month candle is very important to me, and just using it as a means to see how the candle is going to be forming for this seasonal or this quarterly shift. All right, same thing for GU really, but for GU we're still inside of the sell side imbalance here on the 3-month. Again, I'm just going to be looking to see how we form that power 3 on the quarterly shift here, and we can use 20-day look back periods to see if we're in a premium or discount, but I think it's not really as necessary. The look back periods, if you want to, you can. If we form again, if we're forming a market maker buy model here and we come back down, I'll be looking to target those, since that is the look back periods, low and highs, and majority of the time we are gonna hit those areas of liquidity, since they are very powerful. If we go to the monthly, we had an inversion, same with the euro, so it is SMT here. We use it as a means to push price higher, and again I'm targeting this right here until we break that, and we'll continue. I would probably hit this sell side imbalance up here, and then eventually these highs right now or these external highs, but for right now these internal highs, and then eventually the SIBI we do continue to rally. Again here, this one barely swiped buy side. It doesn't have a balanced price range or any like fair value gaps in here like euro does. So again here, we disrespected equilibrium, came back down into a discount, and we rallied. So I do believe this one will take a little bit longer to complete the market maker model, but nonetheless, I do see it happening. And if it doesn't, then I think euro will complete it, and then eventually would drop on euro. That would give me confirmation for GU to drop. So, it's not going to complete it. Sometimes it doesn't happen. Sometimes euro completes it while GU doesn't, and then that helps me understand, I should get out of the trade here for GU since EU has completed. The same thing with, SPX and NQ. But here on the daily, you can see we formed, again, we had that buy side imbalance respected. We created another daily buy side imbalance here off the buy side imbalance on the weekly. What does that tell me? Price is strong in that direction, so order flow is strong, and we use it as a means to push price higher. And again, so as of right now, what do I target would probably have to be this up here, this up close candle, not these two. I think we're gonna get there soon, but I would target this one really because I feel like it just has more power to it since it is up there more, and it's gonna be more of a target to push price in the direction lower. So I'm gonna use that mean threshold of an order block. I think it's very important to use order blocks as targets, not as a trade idea. So I'm going to use that now. So I'm going to have that there, and I'm going to have this in the back of my mind. Order blocks are very powerful. All right, for the indices, SPX, pretty much, I think this one is reaching all-time high. Same thing with NQ. For the stock market, certain stocks, they're rallying back up after the so-called recession that occurred in 2022. And nothing but just beautiful price action here, with bullish order flow telling us we're likely to break those all-time highs and create new ones for these indexes or indices. And just it's a good time to be investing, in my opinion, long-term investing rather than short-term. Buying the dip, a lot of people always talk about buying the dip, but majority of people don't buy the dip. I was too early of a trader to be even buying the dip. I think I didn't have enough intuition. Again here, I'm just looking to see power 3 come back down probably like halfway to this candle, and then eventually rally back up. With this one, probably I feel like we are going to be a lot more bullish going into next year. A lot of things are going to happen, I bet, and they're just going to push the stock market all the way up with companies, earnings, certain reports that are going to just drive these companies up higher even further, in my opinion. So I think I'll be looking to see price continue up. And then here we're creating a buy side imbalance. Perfect. That is going to be perfect for us to come down if we don't take out this buy side, come down, hit it, and then eventually take out the buy side. I think that would be the easiest trade in human history. If you have a monthly buy side liquidity imbalance, buy side imbalance, and then eventually you see a weekly buy side imbalance form or a daily one, you take the trade off of there and you hold it till you reach your buy side liquidity up here objective. It's pretty simple. I'm just waiting for that to happen, and until then I'll be on sidelines. Here we had a break in market structure. So that is telling me, this price lag here that is forming, I would want to see a retracement to equilibrium. And if we don't, then of course, take out the buy side and continue higher. And then eventually see a market maker sell model form with all this price action here that is bullish, building up low resistance liquidity. Since it is, a strong expansion move, we have multiple, breakaway gaps here, telling us, we're straight bullish. And I just don't see us coming down right now anytime. We had a buy side imbalance here on the daily. We used it as a means to push price higher. We closed above this down close candle. What does that tell me? That tells me, we're just forming strong bullish order flow, and I'll probably use SMT. I think SMT on these indices is very important because they just help you understand which one's lagging, which one's not lagging, and which one to trade, which one not to trade, and which one needs to catch up, which one, the six sister approach with SMT, I think is very important. So we reached the buy side liquidity. I think these have been more or less of the volume inside of them as of recently, because of the holidays, and it's a U.S. market, and right now in the U.S., it's a bunch of holidays, or, it's that 2-week period where, we're going into Christmas and then New Year's, and majority of the investors are probably on holiday or on break, or the institutions, they're on holidays too. So not too much, volume in this market right now. So we're gonna go to NQ, and again, same thing. This one broke the all-time highs. I'm gonna be looking to see power 3 form in that monthly candle. We do have a buy side imbalance here, so if we don't come back down, I think I see a reason why. And of course, we're gonna have 3 down close candles. I wouldn't count this one. So 3 down close candles here. I think we can see a little retracement, then rally, and just continuing to develop higher for this one. Again, 3 down close candles, even more, and then we're going to form a little buy side imbalance. So I'll probably want to be seeing that, a buy side imbalance retracement, and then eventually rally higher for the next quarter. I think that would be reasonable in my opinion. We have an inversion for value gap there. We can probably come down to there. We have a breakaway gap. Not a breakaway gap. We have a buy side imbalance here. We filled up and then eventually rallied higher. So we're going to take that off. We did form another one here. So again, just multiple PDA arrays that are being left open, and we're just seeming to form a market maker style model here. It's pretty simple and clear, but until we get confirmation of that, then of course, even then we're in a bullish environment, so it's kind of pointless trying to go short. I would be wanting to, whenever we're seeing the market move back down, I think that would be a perfect entry to go long for the retracement leg, and then eventually catching the expansion. I think that would be reasonable since it is, bullish on the higher time frame, so it wouldn't be ideal to be going short. Of course, you can be going short term, but not long term. I would prefer to go long term. And yeah, that's pretty much it really on the indices. Nothing too much as of right now. Again, I just said the volume's all dead, so I'll be looking to see that next quarter if we can catch a little retracement back down and then eventually expansion back up, especially for SPX having that monthly buy side imbalance with the down close candles. So I think it would be reasonable, and then eventually all the breakaway gaps, one of them getting hit, and then eventually we're coming back up. Now for Dow Jones, again, the same thing really. Just nothing. They're all pretty much the same. That's why I use sixes for an S&T, because these are all pretty much moving in the same direction. They're all moving in correlation. So when one of them's lagging, you buy that one, and then eventually you just, of course, you hold it until it starts going into the direction the other ones are going in. So Power 3, I think this one really doesn't have a buy side imbalance like the other ones. While the other ones did fill it up, this one really didn't fill up anything. This one is a lot more volatile, and it moves a lot, more than the other ones, since it is, Dow Jones. And then eventually here again, we're forming a buy side imbalance on the monthly. I want to see that filled up. If we don't, then of course make another breakaway gap and just show us the strength of us being bullish for the next quarter. If we do get that again, breakaway gap never got filled, I'm going to put it to the next most recent fair value gap. Nothing but bullish momentum, low resistance being built up right now. So whenever we come back down, there's going to be a smooth drop in my opinion, if we do ever come back down, of course. So again, buy side imbalance, down close candle here, just continue to rally, and we're forming highs. So whenever we're forming like new all-time highs, I use standard deviations to take profit if I am going long term for investments, and I use standard deviations on breakers or retracement legs or just order blocks in general, and I use those as take profit areas. So, or just like whenever order flow is changing, whenever 3 PDA rays are getting disrespected, I usually take profit there, and I just cut it right there, and I'm like, all right, profit got cut, stop loss was trailed to break even, no damage was done, all the damage was avoided. So that's pretty much all I'm going to be going into 2024, just looking for the quarterly shifts, seeing how Power 3 is forming on there. And again, that's all I'm doing, looking for external levels of buy side and sell side to be met with internal ranges of liquidity, like the imbalances or fair value gaps to be hit, pushing us in the direction to the external levels of liquidity. And until then, use time and price. So I'll catch you later, guys. Peace.